Hello traders, you are welcome to this video and you are welcome back to the Forex Geek channel. Okay, so in this video we are going to be looking at a technical indicator that could change the way you analyze the market, and specifically we are looking at the linear weighted moving average, okay, or the LWMA. So all you need to do is you have to insert the moving average to your chart and make sure you go to the MA method and change it to linear weighted. Okay, and here we have the linear weighted moving average. All right, so this indicator can be a good and effective indicator for you as a forex trader who wants a more responsive moving average that adjusts quickly to price changes. All right, so by the end of this video you will have a clear understanding of what makes the LWMA unique, okay, how it differs from other moving averages and how you can use it to improve your trading decisions. So make sure to stick around. All right, now before we jump in, if you are new here, be sure to hit that subscribe button and give this video a thumbs up if you find it helpful. Now let us get into it. Okay, what is the linear weighted moving average? To start, let's break down what exactly the linear weighted moving average is. Okay, you may already be familiar with the simple moving average, that is the SMA, and the exponential moving average, that is the EMA, which are two of the most commonly used moving averages. However, the linear weighted moving average, which is the LWMA, works a bit differently, as it places more emphasis on the most recent data points, making it a faster and more sensitive indicator. So instead of giving equal weight to all data points as the SMA does, or using a smoothing factor like the EMA, the LWMA multiplies each price point by a specific weight based on its age. All right, so now the most recent data point has the highest weight, and each preceding data point is progressively less weighted. This way, the LWMA responds to recent price movements with more sensitivity than both the SMA and the EMA, giving traders a clearer, more immediate picture of current trend. Now, let us just briefly touch on how the LWMA is calculated, just to give you an idea of why it behaves the way it does. You can see the way it's reacting to price move. All right, so now suppose you are calculating a 5 period. Let us just change this to 5, a small period. You know, the smaller the period, the faster it reacts to price changes. Okay, so let us say you are calculating the 5 period LWMA. For example, you will start by multiplying the most recent closing price by 5, because we are working with 5 period. Okay, so the most recent, you multiply the most recent closing price by 5, the next most recent by 4, the one before that by 3, and so on until you reach the oldest point in your range, which will be multiplied by 1. You then sum up these values and divide by the total of the weights, which in this case will be, we're going to be having something like 15, 5 plus 4 plus 3 plus 2 plus 1. Okay, so if you have so this way, the most recent price has the most influence on the average, okay, allowing it to react faster to changes in the market. All right, but anyways, you don't really need to do any calculations yourself, because the linear weighted moving average already, has already been programmed to do any necessary calculations for you. All you just need to do is use the moving average, to get your signals and all of that. So why should you consider using the linear weighted moving average in your trading strategy? There are a few benefits to keep in mind, a few key benefits. So first, the LWMA is highly responsive to recent price changes, just like we discussed. This makes it an excellent choice if you are looking to capture market trends quickly, as it doesn't lag as much as some other moving averages might. Okay, so as we can see, let me just increase the period back. All right, so you can effectively use, whether you are a scalper or an intraday trader or a swing trader, you can use the LWMA to get signals quickly. Okay, it doesn't really lag as much as some other indicators. So you might enter your trades on time and exit your trades on time. For example, as we can see in this situation, the price of the assets drop below the moving average and you got your sell signal immediately. You can see that distance from here where you got your sell signal to here, you see that it's not that much compared to some moving averages that might give you the signal probably around here. Okay, now let us just do a very practical example. We can see that this is period 20, right? This is period 20. Now I'm just going to add on another moving average. I'm going to add on the SMA with the same period 20 and you're going to see the difference. All right. So, okay. So can you see how the linear weighted moving average, the same 20 period, all right, the same 20 period, you can see how it is closer to price compared to the SMA. It gives you signal before the SMA gives you. Although it seems like the difference isn't that much, but you can see how the linear weighted is closer to the candlestick. The linear weighted is the black, don't forget. It's closer to the candlestick compared to the SMA. All right. So you can see that the LWMA can help refine your entry and exit points. So by tracking an average that puts greater weight on recent prices, traders can be more confident that they are reacting to real-time price shifts, not just noise from historical data. Okay, it's especially useful if you are working on shorter time frames where slight price movements can significantly impact your decisions. However, it's also worth noting that the LWMA's sensitivity can be a double-edged sword. All right, it's a sensitive moving average, but you know, it's great for spotting trend early. It may also give false signals in choppy or sideways market. Okay, so you might want to stick with trending markets when you are using this particular moving average. Okay. Now, one common strategy involves using involves using the LWMA is to identify the trend direction. Basically, you can use this indicator to identify the direction of the trend, like every other moving averages. Okay, when you have the price trading below the moving average, it's a sell signal. When you have the price, it's a sell trend. When you have the price trading above the moving average, it's a buy trend. Okay, so basically, if you want to get your signals, you just have to wait for price to cut below the moving average, and then you got your sell signal there. You set your stop loss above the swing high. Your take profit could be when you could use the nearest support level for your sell take profit, or you can just wait for price to cut above the moving average and you exit your sell manually. On the other hand, when you are in your buy trade, you just have to wait for price to cut above the moving average, and then you got your buy signal. You can set your stop loss just below the swing low, and your take profit could be at the nearest resistance zone, or you can just wait for when the price cuts below the moving average and you exit your buy trade manually. Okay, you can also decide to use the moving average, the LWMA, with other indicators, any other indicators of your choice. Okay, if you rely solely on the LWMA, you might find yourself caught in trades based on brief price fluctuations rather than meaningful trend. Okay, so sometimes there's no indicator that is foolproof. All right, so that's why it's good to confirm your signals. Okay, so it's important. You can use any other indicator of your choice to confirm your signals. You can use momentum indicator, the likes of MACD, RSI, and the rest. So you can use any other indicator of your choice, and make sure you always use support and resistance lines. Okay, support and resistance zones are very important. Okay, they can hint to you potential reversal points. All right, so there you have it. It's a comprehensive guide to the linear weighted moving average. We've covered what makes it unique, how it's calculated, the advantages it brings to your trading strategy, and so on. If you are looking for a moving average that reacts quickly to market changes and helps you capture trends early, the LWMA might be just what you need. All right, but remember, like any indicator, it's essential to use it wisely and combine it with other tools for the best results. Okay, if you enjoyed this video, don't forget to hit the like button, subscribe to the channel, and turn on notifications so you don't miss out on any future content. Thanks for watching and happy trading.